Here I am going to discuss about the topic redemption of debentures. Redemption of debentures, which is mean that have to settle over their debenture value at the particular point of time, have to redeem their shares at the particular point of time. So that is called redemption of debentures. Redemption of debentures classified into two category. One is redemption without provision, another one is redemption out of provision. Redemption provision, first of all, provision means if in future purpose we know that the expenses will occur, so for that priorly we are keeping over some amount for the expenses purpose. That is called we can say as an provision. So here too, for settle over the debentures, the company will maintain some provision, so that is called the provision. So with that provision, the redemption will be redeemed in the sense that is called redemption out of provision. So there is no proper provision is maintained. In what way the company used to redeem their shares, that is called redemption without provision. So in this case, redemption out of provision, there was a two method. One is insurance policy method. Insurance policy method, it means that the company will take the insurance policy against the debenture holder. So at the particular point of time, the insurance policy will be hold off, so the company will redeem the debenture holder. So that is called insurance policy method. Sinking fund method, in the sense like insurance policy method, sinking fund will be created for every year. So sinking fund, through that sinking fund, the company used to invest in the some over field, so or either used to deposit into the bank. So for that, instead of that, the company used to get the interest. So next year the fund will be accumulated. So each and every year sinking fund will be created, invested, interest get back for the investment. So likewise, particular say for example 10 year is 2010, the sinking fund was created. So 2020 have to end up with the capital, in the sense. So from onwards 2010, every year has sinking fund has to be created. At the end of 2020, the sinking fund will be withdrawn off. So for that sinking fund will be utilized for the redemption of shares. So that is called sinking fund method. So these two method is come under out of provision. Then redemption without provision, we have the three method. One is specified due date, redemption in installment, redemption by conversion. Redemption on specified due date, it means that some specified due date will be arrived for the particular shares. So at the time, what will company do, in the sense the company will take amount from the normally general reserve as well as the profit and loss account. So that is called redemption out of profit. Or else if the company don't have any profit, or else general reserve means the company go with the capital only. So at the time, either the choice is company have to take from the profit, or else company go with the capital. So that is called redemption specified due date. So the next thing is redemption in installment. We have the two methods. One is drawing by lot. Drawing by lot is nothing but debenture holder, that particular due date debenture holder name will be specified in one sheet. The lot will be taken from out of the everybody taken from the one. So that person will be given the first preference for redemption of debentures. So that is called drawings by lot method. Open market buying. The next thing is open market buying. So open market buying is nothing but, so when the redemption of debentures occur, that will be sell into the open market. So so somebody will purchase that. So that amount will be utilized for redemption of debentures. So that is called open market buying. So the next term is redemption by conversion. We have two method. The term itself implies conversion. So debentures may convert into the shares, or else the other other terms, so that is called redemption by conversion. We have two method, one is before and another one is after the date of redemption. So at the time of redemption of debentures, that share can convert their debentures into the shares, or else the before date of redemption can convert it into the debentures. So these would be the methods under redemption of debentures.